some point in spring next year, silver will show up. Now it has shown up a little bit later, but I also thought it would be really like a strong impulsive move, and we haven't seen that. Instead, it's slowly but surely creeping higher, and that tells us that most likely it will break through that $50 level. I mean, technically speaking, we know it's the mother of all cup and handle patterns, so we have price targets of at least $100. You can even make the case for $500 silver an ounce, and I think it's coming. And probably the slower this move up to $50 is now unfolding, the better in the longer run. Yeah. So I'm not worried at all. I think silver is very bullish. And the truth is, compared to gold, silver is still very cheap. So if you want to buy and invest physically in the metals, you need to buy silver.
Silver is starting to close the gap with gold, having gained nearly 6% over the past month. In contrast, gold has traded flat or slightly negative during the same period. Silver is currently priced at around $38, up more than 31% year over year, and analysts remain bullish on its trajectory. Florian Grummes, founder of Midas Touch Consulting, sees more upside ahead. He points to the gold-to-silver ratio, which remains elevated at about 87 as of July 30th, 2025. Historically, this ratio has tended to revert to its long-term mean of approximately 68, suggesting that silver remains undervalued relative to gold. The implication, according to Grummes, is that the significant move in silver hasn't even started. He expects the metal to reach $50 in the second half of the year and possibly break above that level. Technically, silver is also shaping a large cup and handle pattern, which Grummes sees as a bullish formation. He argues that price targets as high as $100 are realistic over time, and some long-term projections even go as far as $500. The key, he says, is the pace. Slower climbs are more sustainable and healthy for the market. For investors looking at precious metals, silver remains the bargain play. Gold, meanwhile, is still up more than 25% this year, driven by geopolitical tensions in the Middle East and Ukraine, continued central bank buying, and growing uncertainty around President Donald Trump's aggressive trade agenda. That said, gold has traded in a tighter range recently, as some of the worst-case fears around global trade have eased slightly. Grummes also believes gold's rally is far from over. He suggests that with patience, gold could reach $4,000 or higher by year-end. For now, it's about letting the market digest the gains and consolidate before the next leg up. The broader environment still supports precious metals. Central banks are holding, geopolitical risks remain unresolved, and investors continue to seek hard assets as a form of insurance. In that context, silver's breakout may just be getting started. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
Yeah, silver is interesting. So it's up 23% since we spoke in April. So came a little bit later than I had anticipated. And the move so far has been less, how you would say, like less momentum driven. Mm-hmm. You've seen a few impulsive updates and then week-long like sideways consolidation. Usually when silver shows up, it goes really berserk and it really rallies hard for a few weeks. That has not happened, which tells me that this whole bull market and especially the rally that we are in the metals is still continuing over probably at least another 1, 2, 3 years, because silver is not showing that typical behavior at the end of a bull run. So it's creeping higher. Then you have these impulsive updates, then multi-week consolidations. I think we're going to see $50 in the second half of this year at some point, but it's playing out slower than anticipated. And I think the reason really is that the physical market is dominating the prices. So you don't have this massive speculative run. It's rather that step by step, slowly but surely, the physical demand basically is forcing prices higher. So it's all bullish. It's all looking good. People have to be a little bit patient. It's a difficult market for traders, but if you've been stacking physical silver over the last few years or even decades, yeah, you're doing well. It would be ideally this 37.50 can hold over the next few days and weeks if silver would want to continue this kind of like consolidation. But even if it would pull back a little bit further, I'm not worried at all. I mean, look, the gold-silver ratio is still so high. It tells us in the long run, silver still has to make the big move is still coming in silver. And maybe, I mean, we all expect the $50 level Now, my thinking last year, and I wrote this in a few papers, I said at some point in spring next year, silver will show up. Now it has shown up a little bit later. But I also thought it would be really like a strong impulsive move, and we haven't seen that. Instead, it's slowly but surely creeping higher, and that tells us that most likely it will break through that $50 level. I mean, technically speaking, we know it's the mother of all cup and handle patterns, so we have price targets of at least $100. You can even make the case for $500 silver an ounce, and I think it's coming. And probably the slower this move up to $50 is now unfolding, the better in the longer run. Yeah. So I'm not worried at all. I think silver is very bullish, and the truth is, compared to gold, silver is still very cheap. So if you want to buy and invest physically in the metals, you need to buy silver. Well, look, I told you back then that we've probably seen a short-term blow-off top, so to speak. And I also said that gold isn't very likely to go below 3,000, but rather trade sideways, consolidate that big move that we've seen since the beginning of the year, right? So this new all-time high at 3,500 is still in place. We've seen a low at 3,120. Gold recovered quickly and failed to break through 3,450 now, I think 4 times. And over the last few days, it came back hard, nearly $135 within the last 4 trading sessions. So here we are, summer doldrums. It's trading sideways. It's consolidating. It's digesting. It's nothing spectacular. It just takes time. People need to be patient. I'm not worried that gold is dropping big time here, but could this continue for a few more days, weeks, maybe even 1 to 3 months? Yes. Usually the summertime is a time to go to the beach and take it easy. There are still some traders chasing every move, but generally volume is lower. Yeah. And that's what we're seeing basically in all markets. And of course, also in the gold market. We had the COMEX option expiry yesterday for the August contract. That's usually also something where they like to take the market down. So that most of the options expire worthless. That happened yesterday. But I think already here at 3,300, let's say 3,285 on the daily chart, gold has very good support. I don't see it dropping much. I also think you need to be a little bit more patient here. But over the rest of the year, I think we can see 4,000 plus X.
Okay.
I think in the very short term, it's sideways to down. The daily chart is already showing a little bit of an oversoldness here. So I don't think we have a lot of downside in the immediate future. I mean, of course, end of August, we have the Jackson Hole meeting that also usually can create some pressure in the metals. But overall, look, I mean, maybe it pulls back again to 3,250 to 3,200, but this is all not big moves from where we are. Yeah. So it's building a base here, and it tested this 3,450 now 4 times. It's just a question of time when it will break out. Obviously, nobody knows this. But as soon as I see that a bottom is in of this pullback that we are experiencing right now, I will call it. And I think, third or fourth quarter, we're going to see $4,000. The silver stocks have been doing really well, and this is still probably at the beginning of that bull market. So if you compare it to former bull runs, it's still in the early stage, I guess. Last time I was on 3 months ago, we talked about Silver Tiger Metals. They're in Mexico. The stock is up 125% since then, trough to peak. It's now pulling back a little bit. I still like the story very much. I think that Mexico is back on the radar. I mean, we've seen a few really large takeovers. Remember, Silvercrest got taken out by Core Mining, a deal above $1.7 billion. Then you had Gatos being acquired by First Majestic, and you had Meg Silver being acquired by Pan American Silver. So I think all these big producers clearly showing that they trust the new government in Mexico. Otherwise, they wouldn't invest there these huge amounts of money. And Silver Tiger is one of the very few assets left that can probably come into production rather quickly. So all they need is the permit. I think this is coming in the next few weeks and months. And once they have the permit, it takes 18 months and they are in production. So that's still one of my favorite silver stock plays here. And of course, you have a large group of stocks that you can play with an ETF, but that's my favorite.
Florian Grummes argues that it's no longer just about what the Federal Reserve wants. The bond market is asserting control. Investors are demanding higher yields, and the U.S. government is struggling to attract buyers for its growing debt load. That dynamic limits the Fed's room to maneuver. Even if policymakers are inclined to cut rates, market conditions might not permit it. In reality, The Fed follows the market more often than most people realize. Inside the Fed, dissent is brewing. Two governors, Christopher Waller and Michelle Bowman, could vote against keeping the federal funds rate in its current range of 4.25 to 4.5%. If that happens, it would mark the first time multiple Fed governors have dissented on a rate decision since 1993. Both have argued in favor of cutting rates, and Waller's potential candidacy to replace Jerome Powell as Fed chair next year adds weight to his stance. This upcoming meeting also carries political baggage. It follows President Donald Trump's high-profile visit to the Fed's construction site, which sparked controversy over massive cost overruns. The central bank has responded with a full-scale PR campaign to push back against the criticism, but the issue is expected to surface again during Powell's post-meeting press conference. On the economic front, the Fed is weighing the impact of Trump's trade policies. So far, the feared inflation spike from new tariffs hasn't materialized, which makes delaying a rate cut harder to justify. Trump's vocal push for aggressive monetary easing adds even more pressure to the decision-making process. Let's get back to the interview.
I mean, what we've seen in the mining stock sector over the last few weeks was that a lot of smaller companies managed to get financings and actually doubled their financings, which is usually a little bit of a sign that maybe the market is a bit toppish. But if you zoom out and look at, for example, the TSXV, I mean, it's still far below its 2012 highs. And I think that's where the music is going to be going forward from here. Once gold breaks out above 3,500 and then really runs towards 4,000 and probably much higher, you're going to see some of those smaller stocks really exploding. The big names, many of them have done well. Some of them have disappointed as well. But I think now it's the time to really focus on the smaller juniors and also the explorers. That's, I think, where the value is, and that's where the music is going to be in the next 1, 2, 3 years, I guess.
Yeah.
Well, I mean, the background, I think, is that we had a bit stronger U.S. economic data last week than expected, which obviously lowered the probability for a rate cut even further. And since gold has sold off since then, yeah, probably we could see a bottom here tomorrow I don't think there's any surprise from the Fed tomorrow, but a little bit of a bounce for gold and silver, as especially gold is becoming slowly but surely oversold. So, but I don't think the Fed is going to lower interest rates anytime soon anyway. I mean, this is like there is inflationary pressure. I mean, we have the war cycle going on. There is so much pressure. Of course, Trump wants to get rid of Powell, but he's still running the show at the Fed, Powell, and I think he will continue to be rather not hawkish, but at least maintain that interest rate level where we are right now. And don't forget, in the end of the day, it's the market who makes these decisions. And in this environment, people demand, investors demand higher interest rates, and Americans still have a problem to find enough buyers for their treasury. So it's much more complicated than just the Fed wanting or having to lower interest rates. I mean, it's the market basically who tells the Fed what to do in the end of the day. Because what I see again and again with retail investors is, especially now in the summertime, and I said it before, like it's the time to be at the beach, enjoy life, go into the nature, hang out with the family or friends. You don't have to chase the market, even if you have a large liquidity position on your bank account or whatever at your brokerage. Take it easy and wait for the trade to come to you, the investment to come to you, like don't chase it in these like summer doldrum times. I think we're going to see some good entry opportunities towards September, maybe latest in October. And that makes much more sense than to stress yourself right now while it's summer and there's other things to do. The markets are with low volume, tricky moves. You can have sharp moves in both directions, decisive moves. I wouldn't want it to be fully invested here. That's usually always a good recipe for the summertime. Don't worry, let the trade come to you. I mean, that's really something that people need to learn. being patient, this will always pay off. I mean, look at Warren Buffett. I mean, he's stacking cash for how many years now? He's waiting for an opportunity, and that's why he's able to wait, and that's why he has become one of the richest men on the planet. So I think people really, really need to understand that. And I understand it's difficult. It's a game with yourself. Being patient is not something that you usually learn in school. I think it's a little bit further ahead into this consolidation. So if there is a move, it's probably going to be gold. And it has been leading actually Bitcoin higher. Don't forget that. So and as we already just talked about, if the stock markets gets this typical pullback during the summer months, it will affect Bitcoin as well.
Momentum is shifting, and it's no longer confined to gold. Silver is beginning to assert itself, not just as a secondary metal, but as a potential frontrunner. The price action, technical setup, and valuation gaps all suggest something bigger is building beneath the surface. Meanwhile, the Federal Reserve is losing grip on its narrative. With bond markets pushing back, internal divisions growing, and political pressure mounting, monetary policy is becoming more reactive than decisive. Precious metals are thriving in this ambiguity, quietly reclaiming their place as real stores of value. If both silver and central banking are entering new chapters, which one ends up leading the next phase of financial realignment? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.